Healthcare costs are rising, and the result is more people are going into debt to pay for care. Americans owe in the neighborhood of $220 billion in medical debt, and the government has proposed rules to prevent medical debt from hurting your credit score. However, that does not include medical credit card debt, something more people are finding themselves falling into. It's one reason consumer advocates warn that patients should think twice before signing on that particular dotted line. Senior consumer investigative correspondent Anna Werner is here with what you need to know about all this. Anna, good morning to you.
Yeah, good morning, Tony. You know, these medical credit cards have been increasing in popularity as a way for patients to pay for medical expenses like hearing, vision, dentistry, even hospital services. But consumer advocates say some of those cards could end up hurting your credit score or leaving you in deeper debt.
I applied and put the exact amount of what my procedure cost.
Mary Imanina was so concerned about her experience with a medical credit card, she highlighted it on TikTok.
I'm going to tell you what happened so this never happens to you.
Imanina says it began last year when she went to an orthodontist to get Invisalign braces. The price, $4,500 up front. She says the office gave her a couple payment plan options. Put $1,000 down and get a plan through the doctor's office, or she could sign up for what's called Care Credit that offered no down payment plus no interest for 18 months.
You don't have to put anything down, which is really what caught my attention.
Care Credit, owned by Synchrony Financial, is advertised as a way to pay for health and wellness at over 270,000 locations across the United States. The company's website does mention it's a credit card, but because it's often pitched during doctor's appointments by health professionals, some consumers, including Imanina, don't realize it's a credit card like any other.
I didn't really know that it was an actual credit card. I thought for some reason it would come out on my credit report as like a loan of some sort.
After making her first payment, Imanina says she checked her credit report and was surprised to see
it dropped my credit score 50 points.
She says the card appeared on her report as a nearly maxed out credit card, hurting her score. Not only that, but she says she realized the proposed payment schedule set up by Care Credit wouldn't cover her total costs in the 18-month promotional period, meaning she'd eventually owe interest as well.
If I was paying only the minimum payment, the interest would have applied to my account.
An interest rate of 32.99%.
The payment they initially gave you that they automatically calculated was not enough to keep you in the interest-free zone?
No, it wasn't.
She's right. There online in the fine print of the credit card agreement, it says the required minimum monthly payments may or may not pay off your purchase by the end of the promotional period. And if it's not paid in full by then, the company will tack on a lump sum interest charge when the promotion period runs out.
What do you think of that?
I think it's pretty sneaky.
Medical credit cards can be extremely harmful to consumers.
Chi-Chi Wu is with the National Consumer Law Center. Her group warns medical credit cards can have higher interest rates than other credit cards and calls those deferred interest plans deceptive.
There's no interest for 6 months or 1 year, but you have to pay off the entire balance by the end of that 6 months or 1 year. And if you don't pay off the balance, interest is accruing in the background and it'll be slapped on the account after that 6 months or 1 year, which is really can be a trap for consumers.
Synchrony Financial officials push back on those characterizations, telling CBS News there's nothing deceptive about Care Credit's deferred interest program, that the rules are exceptionally transparent, the deferred interest promotions are popular and well understood by consumers, and the company follows all applicable federal regulations. But this California state senator says,
most consumers don't realize, wow, I just took out another credit card.
Monique Limon is sponsoring legislation that would ban credit reporting agencies from factoring medical debt, including from medical credit cards, into a consumer's credit report or score.
Medical debt shouldn't be treated the way that other type of debt is treated, and it shouldn't be reported to a credit agency where then it can have an impact on your ability to buy a home, your ability to rent, your ability to get a car. All of these things are really key things that people need.
Well, the Consumer Financial Protection Bureau is now examining how financial institutions market their products to healthcare providers in the wake of complaints from patients. Now, Synchrony officials told us that they made the promotional features clear to Imanina. They also said the cards are not designed to be used for large-scale catastrophic health costs, but provide another way for consumers to pay off less expensive procedures over time.
You know, I love when you're here, Anna. These stories are always so eye-opening, and the people on the medical website seem so happy and pleased with their service, but clearly for everyday consumers, things can go wrong. So what are the takeaways?
So I think one of the takeaways is you might be better off working out a payment plan with your provider at the doctor's office. It might be cheaper. You really need to look at that. You might pay $500 down, but then their interest rates might be a lot lower. There might not even be any interest. The other thing is, remember, it's a credit card. So because it's presented in the healthcare setting, I think people sometimes get confused. People we talked to said, well, like she did, well, I didn't really understand it was a credit card. You can use your regular credit card. If you feel like you're in a situation where you don't know how to decide, but you already know what your regular credit card charges you for interest and payments and what the rules are, use that instead.
Very good advice, especially when it's in a doctor setting. You're being offered this. It's like we're programmed to trust them. Thank you so much, Anna.